Good afternoon, everybody, and thank you for joining this afternoon's Cuppa Club with James and Harry from Great Western Credit Union, also known as GWCU. So James Berry is CEO and has been working at GWCU since 2007, helping to grow assets from £500,000 to around £13 million today, and very impressively growing the membership from around 1,200 to over 18,000 today. And sure, James and Harry will pick me up if my figures aren't quite up to date. Harry Partington is head of marketing, and at this very exciting time of transformation for GWCU as they roll out their services and attract new members from across the Southwest. So my name's Paul Pizzala and I'm Senior Investment Manager at Ethex. And I've been working with James and Harry and the team on the very successful launch of GWCU's community bond offer earlier this year, which also benefited from fair for all finances match funding. And I'm delighted to say that GWCU have reopened the bond offer. So before we get started, there's a bit of housekeeping to do. And I'd like to let you know that the Cuppa Club is recorded, and we'll edit it to a highlighted version too to send that around. That this isn't a financial promotion, and if you do need financial advice, please do talk to an independent financial advisor. For many of our regular Cuppa Clubbers, you'll know this usually runs for around about 45 minutes and is a really good opportunity to meet and ask questions to directors and hear about why Great Western Credit Union is such an impactful organization. And this is our second Cuppa Club with GWCU, and we're taking a particular focus on how their financial products and services are making a difference. And as usual, we do invite questions from the audience on all aspects of the business, including the risk associated with their growth plans. So please do feel free to ask questions in the chat box, and we'll take questions as we go along. So before James and Harry introduce themselves and GWCU, this bond offer, the community bond offer, is live on Ethex's platform, targeting an additional raise of up to £600,000, which is match funded by pound for pound by Fair for All Finance. So in all, aiming to raise £600,000, £300,000 from investors, £300,000 in match funding to take it to 600,000. And it's really great to see that we're almost a third of the way there, just after 2 weeks in the second phase, having attracted 90,000 of new investment from 49 additional investors, which is absolutely fantastic. So meaning raising 180,000, including the match funding. The bond is offering a potential return of up to 6.5% and is available in an IF ISA. So that's an innovative finance ISA that provides a tax-free environment. So without further ado, I'm going to hand over to James and Harry to introduce themselves in the context of GWCU's offer. Over to you, gentlemen.
Thank you, Paul. I'll lead off on that one. I'm James Berry, so I'm the Chief Executive of Great Western Credit Union, as Paul said. And as he also said, I've been doing this for a very long time. My background before that was in various different roles within for-profit banking, primarily in marketing, but also working across a number of different projects and market analysis, amongst other things. My background a long time ago, though, is much more one of lived experience of the sorts of issues that financial exclusion brings. I grew up on a council estate where there wasn't a lot of money around, and something like the credit union would have been fantastic for the folk in that area where I was living. So I brought that to the role as well, and really this bond offer, this raise, is a really important part of enabling us to do the great work that we do for many more people. And obviously we'll run through now some of the things that we're doing at the moment and what makes it special. And at the end, hopefully questions will come in and we'll be able to answer those for you as well. But if there is interest in investing, then please do work through the due diligence process that Ethex has on its website to make sure the investment's appropriate. Do remember that capital is at risk as well, of course, 100% at risk. This is not a financial services compensation scheme protected investment in any sense. But if you would like to support the work that we do, then that opportunity is there right now. Harry, would you like to say a few words as well?
Thanks, James. Yeah, hello, everyone. My name's Harry Partington. I've been a member of the credit union for almost 14 years now. And during that time, I've had various savings accounts and, in fact, 3 different loans, James, to help buy second-hand cars. I get through cars. I'm currently interim head of marketing, as Paul said, but previously I was a volunteer director for 9 years on the board of what was then Bristol Credit Union, and chair for 7 of those years. And it was with quite some reluctance that I had to step down in 2019 because I'd come to the maximum term of office, but really pleased to be asked to get back involved in spring of this year in the interim head of marketing role. And really my focus is to help James and the rest of the leadership team and the board to drive the planned growth, which is supported by the bond offer that we're talking about today. So really pleased to be here and looking forward to talking with you today.
Brilliant, great. Thank you, Harry. Thank you, James. So I'm going to start getting into the body of the questions, and we're going to ask it in 2 parts today, which I imagine are related. So the first part being about types of products, that's your loans and savings products that you offer, and the second about your transformation and growth plans, which Harry just touched on there. But first, maybe we should just go back to basics and a few sentences each on what is ethical finance and what separates you from other commercial lenders.
I think if I can pick that one up, Paul, I think ethical finance in its broader sense for me is the ability of we as investors, we as people who run financial organizations, to make sure that money is going to the right sorts of things. And those sorts of things being the type of stuff that improves our environmental outcomes, investing in all sorts of stuff like many of the community energy offers that Ethex itself has on its platform, working to achieve good social outcomes too. So that's probably one where we play a stronger role. So we're particularly looking to support financial inclusion and to help people who otherwise might struggle to access service, or who might pay a very high price for the service that they could access, to have a better outcome and a better result from the services that we can provide. I think ethical finance in a credit union context in particular is a little different from commercial providers for 2 main reasons. So firstly, we're a mutual, so our structure is one where all of the people who are our customers, all the people who have an account with us, are part owners of their own bank in effect. And that means there's a real clear line between those customers, the volunteer board of directors who those customers elect to run the institution or oversee the institution on their behalf, and us as the staff team implementing the policies, implementing the strategies to provide service for those members. There's no external shareholders who are looking to maximize profit from what we do. So that's a really important point. We're about maximizing value for the membership, for the community, and for our stakeholders, not about enriching a small group of people by lending at the highest price we possibly can do to people who perhaps that's not always appropriate for. I think the other thing that makes us different is that we do have that real focus on what people are looking for in terms of how they actually live their lives. And an example of that would be that loan repayments for us can be split between weekly, fortnightly, monthly, or 4-weekly. And we advise people to choose the frequency that matches when they get the majority of their income. Now, most institutions will say, okay, you pay your loan back once a month because that's how most people get paid. And of course, for most people who are banks willing to lend to, that probably is how they get paid. But in reality, for a lot of people, they're working to a weekly budgeting cycle, or they're working to a fortnightly budgeting cycle, or in some cases, of course, a 4-weekly one. So we've always taken the view that it's much better for both us and for the borrower if we work with that, and we adjust our products, and we adjust what we do to reflect how people actually live their lives. And that's another thing I think that makes us quite different to commercial lenders.
Brilliant. That's a great answer. Yeah, thanks for that, James. There's a lot in there. That's really very rich. Thank you. So Harry, shall I move on to the next question, unless you have anything to add?
No, I think James has given a cracking answer there. So I'd be just adding cherries to the icing and the cake.
Brilliant. That's fantastic. So kind of start getting into the products and the services, savings and loans, and building on that platform that you just discussed, James, in terms of what makes you different. Can you explain your family finance plan? What's the benefit of this to lower income families and other families?
Sure. Well, I'm going to pick that one up, Paul. So the family finance plan is now an award-winning service because it gives families credit when they need it. So what that means is they've got a safety net against unexpected costs, and also at stretching times of the year, like back to school or Christmas. So the way it actually works is it provides a £500 borrowing facility automatically when the member takes it out and switches their child benefit payments to the credit union. So the member only pays interest when they're actually borrowing money, and then the amount borrowed reduces as their child benefit payments arrive. So it's almost a continuous revolving facility. What's quite interesting is that the member can also build up a savings balance once their fixed repayment amount for any of the borrowings being taken from the child benefit payment. So although the borrowing bit's like a kind of a cross between a bank overdraft and a loan, the member doesn't actually need perfect credit history to apply and just needs to switch their child benefit payments to us at the credit union. I'm sure potential investors would be reassured to know we do carry out credit reference checks. We don't just provide it to anyone who switches their child benefit to us, because it would be irresponsible to offer the plans without some degree of prudence. But as James was hinting at in his previous answer, our underwriting criteria is much more flexible than a typical high street bank. And that means that we can offer families on benefits a relevant proposition that really helps them when they need it, and to operate that quite flexibly throughout the year. So that's the family finance plan in a nutshell.
And the other thing I should say about the family finance plan, just in terms of that underwriting criteria and who we're able to offer that product to, the other check that we do make over and above all else, not only for the family finance plan, but for all of our other lending as well, as affordability. So one of the things, just going back to that first point about what makes us different to commercial lenders, is that we do take more account of people's circumstances and the story that's behind those circumstances as well. So oftentimes a person or two different people could have pretty much the same credit score, but they can both be driven by very different situations that they found themselves in. One person might just not have a very good track record of paying stuff back. The other one might have run into a particular issue where they've lost a job, they've had a relationship breakdown, or some other situations occurred that they're then recovering from and able to move forwards from. The credit score itself wouldn't necessarily tell you anything about those two different aspects. and that's something that it's important for us to take account of. The most fundamental thing, as I say, is affordability. So that's what we check above all else. Do we believe that this person can afford now and is likely to be able to sustain the loan repayment they're looking to make?
That's great. And just sort of reflecting back, it's that personalization of understanding each individual's circumstances, as well as the credit scoring, which I'm sort of assuming, and it's a bit of a grand assumption, that maybe the mass market banks aren't able to do that extra listening piece that potentially could really make a big difference to people's lives in terms of, you know, stopping their life spinning out of control. So sounds, you know, like a very valuable service to individuals in the community.
I think, Paul, the high street banks, and like James, I used to work for a high street bank. They could do that extra listening, but they're choosing not to for commercial reasons. And I think that really emphasizes the difference between our approach and the high street bank. They could do it, they're just choosing not to.
Yeah, okay, great. And that's all about ethos, isn't it? I think.
Yeah.
So Ethex is well known for supporting community renewable energy organizations, and you mentioned that earlier, James, actually, and I see that GWCU offer a solar loan, and sort of captures the imagination. Is that a holiday abroad somewhere? I don't know. Can you can you tell us how you develop that product, how it's performing, and for your members, and why it fits into your mission as a credit union? And by the way, I'm not assuming that it's a holiday in the sun. I'm assuming it's something to do with renewable energy.
Well, holidays in the sun, actually, no, of course it's not. So the initiative actually came about from listening to some of our members. So we have a few members who've been with us quite a long time, who are quite heavily involved, or have been quite heavily involved in various different transition groups. And the initial impetus for the product came about because they were looking to develop a way of benefiting from a group discount. So bring a group of people together to install solar in a reasonably small geography, and in that way engage one supplier to come and do a bulk install and kind of get some discount, which would then be a benefit to the people who are doing the installations. Some of those people might have been able to fund it themselves, others might not have been able to in terms of the upfront cash. And so being members of the credit union, they came and said, is there anything you can do? So we had a bit of a think about it and decided that yes, of course, we'd like to be able to support that initiative, and came up with the particular product, which was the solar loan. And that really is designed not just for solar, but for other renewable options as well. Now, it could be other things like heat pumps. We need to reflect a bit on the name and whether that focuses it a bit too much on that particular side of things. Somewhat ironically, because of the energy bills and so on rising so much, the various groups haven't managed to find yet any installer who is able to do the bulk discount, because they're all so busy installing solar panels at full price for everybody who wants them. The capacity within the market for installation actually seems to be one of the limiting factors at the moment in terms of moving that on for people. So the product hasn't had as much success as we would have liked in that sense, because I think as I say, the kind of the supply side has been more limited. But it really does fit into our mission, because we're not just here to support individuals who are immediately in front of us, although of course that's the prime focus for our work. We're also here to support the community in its broadest sense, and to do the right thing both for people now but also for the future. And the right thing for both now and for our collective futures is to make sure that we are supporting our transition towards net zero, our transition towards zero carbon overall. It's just net is one part of it, but there is a further journey, I think, towards zero. And I think anything that we can do as an organisation to work with our members to help them to achieve their own goals, and that space helps us to achieve our goals too. I think that more organisations like us, like the community renewables organisations that you support through the platform as well, can do in this space, and the more individuals can get involved with us, the better our collective chances of, as a society, of going in the right direction. Particularly when, as we've seen just last night, you know, the prevailing climate can change quite quickly in the political sense, not in the climate out of the window. And you know, the extreme, for me personally, speaking of this, the extreme disappointment of hearing the sorts of things we were hearing last night is just very depressing. So as a reasonably optimistic and positive person, I'm just glad there are more and more of us who are trying to do stuff in this area to make a positive difference, and we will continue to do our part on that.
Yeah, absolutely. I think that's exactly it, isn't it? You know, this whole area of people participating and coming together to create really good communities of practice, businesses, organizations, ecosystems that can all support each other in this mission of climate positive investing, social justice, and community resilience, which we all absolutely live and breathe. So it's, you know, fantastic to hear you talk about the transition in the context of what Great Western Credit Union is achieving in its community. So, Harry, unless you have anything to add to that, I'm gonna go on to the next question.
That's fine by me.
Perfect. We live in a digital age, don't we? And I know that part of the ability to reach out to people and create new products that are appropriate for your market and your customers, and also to gather all that intelligence, having a very slick digital platform with, you know, all the data architecture underneath, so you can understand what's going on in your marketplace, is, you know, absolutely critical. And I think that's the driver underneath the bonnet that the money is being raised for. So with all that in mind, when I look at your website, I actually find it quite easy to navigate and see what the savings products are. They're well signposted. The customer experience feels quite intuitive. If I go onto Vodafone's website as a customer, I'm off again in sort of 30 seconds because it's just, you know, there's so much going on. So it's very clear and well signposted on your website. So I'm assuming that's because you've thought about your customers a lot. So with all of that in mind, can you tell us about Easy Saver, Child Saver, and Christmas Saver in terms of how you know your customers and then create savings products that are accessible and that work for them?
Yeah, of course, Paul. I will start with a bit of a positioner on that digital customer experience that you talked about, because we do think about our members a lot, but not just our existing members who are obviously top of the tree, but we also think about potential members who might be interacting with us for the very first time. And that's where it's so important to get that digital experience right, because they might have been referred to us by word of mouth. They might have seen an advert. There could be a variety of ways that they come to us. But once they land in either on our website or via their phone, it's so important to keep them there and get them to interact with us, as you said. So what we did was we worked really hard to select a great partner to work with, knowing that we couldn't do it on our own. So we partnered with an organization called Digital Wonder Lab. We think they've done wonderful work. But that was to create the right customer experience by thinking through and then testing user journeys before implementing them. Now, I think what's interesting here is this included taking a so-called mobile first approach. So that might be jargon for a lot of people, but what it means is that we had insight that showed that most of our members use mobile phones, and most of them used smartphones. They might not have been top of the range smartphones, but there was a high usage. But there was a real aha moment when that same insight revealed that those same people who used mobile smartphones, actually many of them didn't have access to laptops or desktops. And therefore, the traditional approach of designing your digital customer experience around a computer screen just wasn't relevant, because most of our members were using phones. So we took that mobile first approach, and I think that's now common for organizations. But when we did it a couple of years ago, it really wasn't. And it probably wasn't common for a credit union to do that. So I think that's made a real difference. That's been a great outcome. And in fact, we've been recognised with Digital Wonder Lab by the FinTech Awards. We were highly commended, and that was really encouraging. We didn't set out to win an award, but to be nominated because of what we'd done was icing on that proverbial cake.
Yeah. You
talked about the savings products. Well, yeah, we always put members at the heart of the proposition development process, because that's what we call it. The 3 products you mentioned, we've offered for quite a long time, but they were originally set up in response to how our members live their lives. So whether that's needing to be able to get at their day-to-day savings now, which is at the heart of Easy Saver, instant access, easy to operate, or a really powerful insight was the need to put money away regularly during the year to help pay for an expensive period that is Christmas. So that's the way that people have to manage their finances, and that was at the heart of the very simple and straightforward and focused product that is Christmas Saver. But what I want to quickly talk to you about is one that's in pilot right now, so it's not on the website, and that's the Family Saver proposition. So we work with a group of members, some community researchers, and in fact the University of Bristol, because they've got a particular focus on personal finance. And we've been exploring the barriers that low-income families face when potentially saving money. And as a result, we created a different type of savings product, which we call Family Saver. And a bit like that family finance plan, it's linked to child benefit payments, and it gives the member the option of nominating a regular amount to put away from their child benefit, as well as naming the account to make it more relevant to their savings goal. I know that's something that some organizations have done in the past, but for us, it was a really powerful insight. And then what we're also doing is testing out a small member reward payment. So if the member sticks to their regular savings goal, no matter how small, we will give them a small reward payment after a period of time. Now that's still in pilot, but the early signs are that proposition's really working for the members who are using it. So I think it's pretty likely that we'll roll that out more broadly. So hopefully that gives you a bit of an insight into not just where we've been, but how we're continuously evolving our proposition and how members are at the heart of it all.
Yeah, brilliant. Having the value proposition designed right in at the outset is critical, isn't it?
And I think listening to the needs of the members as well, and really trying to understand what they're looking to achieve in terms of outcomes, and then seeing how best we, as the organisation that's there to support them, can help them with that. And also then, of course, measuring what happens at the end too. So a big part of our work each year is to produce our social impact report, which looks at the outcomes that people have experienced during the year and how well those things that they were looking to do have been enabled by the credit union. So it's a big part of why we are who we are and how we show that to our members. It's listening to them, trying to help them to achieve their desired outcomes, and then checking back to say, did we make a difference for you as well? And again, that's part of the feedback loop that enables us to keep honest to what they're looking for and enables us to meet their needs.
Exactly. That's what I was going to say. Sorry, Harry, those feedback loops are so important, aren't they, in keeping your ear to the ground of what's really happening.
Yeah, I was just going to make a plug for that social impact report, because we've made it available on the Ethex page for the GWCU bond offer. So if potential investors go into the sign in and follow the updates, there's a link to the social impact report that we published a couple of months ago. So the very thing that James just mentioned, people on this webinar will be able to go and look at.
Fantastic. That's great. And I think what's really, it's not news to me. It certainly isn't news to you. It may be news to new Cuppa clubbers today, is that credit unions, it's fresh thinking, it's ethos, it's intelligence, but also it's using technology to the absolute best of its ability as well. I think that's kind of having those three things, that the ethos, the intelligence, and the technology, are kind of put you in a pretty unique position to be able to deliver on your social impact. So it's really fantastic to hear that. Which takes me on to my next question. In a competitive marketplace, it's not enough to be ethical, in my opinion, and you need to differentiate yourself through the quality of your services and innovation. So in that light, can you explain your Money at Work program? Because that also sounds like something that's not aimed at individual savers. Maybe it is. What it is and how does it work? Why is it beneficial to people? And then you sort of touched on the sort of tail end of next part of the question I'm going to ask with the solar loans, and what is it when products don't work? You're getting the feedback. What happens when products don't work, and how do you then think about what do I do next? So maybe focus on Money at Work program and why that's innovative and why it's delivering, and then maybe focus on what happens when something isn't working so well.
Yeah, I'm going to pick that one up, Paul, because part of my role is to lead that Money at Work program. So as people will probably think, money at work is something to do with employers and organizations. And that's what it is. It's a program to provide simple savings, affordable loans to employees of organizations who we partner with. So the way it works is the employee can set up a regular savings amount or apply for a loan, and then those repayments or that regular saving amount would come directly from their net pay before they receive it. So it's proved to be a very, very effective and easy way for employees to access financial products. And it's easy for the employer because what they do is they simply send us one payment each payday, which is the aggregate amount of all of those individual savers and or borrowers. But we've previously shared data with each other to know that when we get that one payment, we apply it to the individual employee member's savings account or repay that month's repayment of their loan. So it works in a very straightforward way. We're currently working with 38 organizations, and they've got about 42,000 employees. So you might say, well, that's going really well then. It is, but there's so much more opportunity. There are many more organizations that we would like to work with, many more employees that we would like to reach with the proposition and the ethos of the credit union. And that's actually at the heart of one of our goals for this bond offer that James will talk about a bit later. You said, why is it beneficial? Well, the employee gets access to those kind of products that are competitive, ethical, and locally offered. And actually, the research has proved that those employees feel better off as a result. Their financial resilience is stronger, and actually their well-being's improved because they are sorting aspects of their financial life. So the employee really feels better as a result. But what's interesting is the employer benefits as well, because if the employee is feeling better as a result, all the statistics show that they turn up for work more often. They're more productive when they're there, because genuinely they feel better off. So for us, working with current partners and potential partners, it's a great conversation to be having. We're not pretending that savings and loans will change people's world on their own, but as a component part of the broader employee benefits package, we think it works really well. You did ask us what doesn't work well. Well, we're quite transparent about that. We have a proposition called Flex at Work, which is a bit like that family finance plan we talked about earlier, offering revolving credit. It's not gone as well as we thought it would. So we did a bit of research work around that. And what we found is quite interesting. Firstly, during the cost of living crisis, organisations have started to offer small, affordable borrowing in-house for their employees. So in effect, we've got a competitor that is the employer. And then secondly, this is quite interesting, we do have competitors and in the specialist employee benefit market, and they've got a similar proposition, but they very clearly call it salary advance. Does what it says on the tin. So if you're mid-month, you need some money from the next salary, we'll advance it to you. So we sat back and went, oh, so the product's fine. It's just that the positioning and the communication and promotion of it needs to be changed. So that's what we're going to do. So I think for me, that's good proof that we just have to continuously evaluate, use the insight, and invest in continuously improving what we do. And that's really at the heart of the bond offer.
Brilliant. Oh, that's a great example of feedback, isn't it, in real life, and how to keep positioning right, because the product can be great, but it doesn't have the right label on the tin. People don't get it.
Yeah, well, we've had to admit that to ourselves.
Yeah. Okay, so I'm gonna push on to the next sort of final question before we get into our outros. And I think Harry, you sort of summed it up there a little bit, but if we just, let's say we get to the 600,000 in this bond offer, this reopened bond offer, what is that going to help you to achieve? That's a James question, I think.
Yeah, thank you, Paul. I think for the very practical stuff, there's a good write-up in the bond offer document, so do please have a look at that. And so again, bear in mind all the risk warnings and everything else that are in there. In essence, though, we're really going to be able to increase our scale and our impact. And we'll do that in a number of ways. So growing the number of people who benefit from our service across the region. That's very important to us, taking our message out there. There are increasing numbers of people who could benefit from our service at the moment. The Financial Conduct Authority regularly looks at the number of people who have, show aspects of financial vulnerability, and there are around 25 million people within the country who have some aspect or other of financial vulnerability in 2022. There are many of those people across the Southwest, unfortunately. Even one of the things, actually, just to follow up on the point around money at work, sometimes people have the impression that actually, for that group, you're talking about employees, how poorly off can they be? Well, the sad reality of day-to-day life at the moment, because of the way that cost of living has affected everybody, but most of all those who are on lower incomes, is that people in work are often just as financially vulnerable and are struggling almost as much as people who are on even lower fixed incomes from benefits. So the scale of challenge is greater than it's ever been. And with the bond investment, we're going to be able to do more to help do what we can to help people to manage through these tough times that we're all in. As part of that, we're looking to continue to enhance our digital platform. We've got different tools that we're looking to introduce. So, for example, one of the things that's always been important to us as a credit union is the ability to listen to people's stories and to have some form of personal contact. And as we've moved into a more digital age and a more digital era to reflect what people want, that can become a bit more difficult. So it's then saying, okay, well, if we believe that digital is the way forwards, and that's what all our members want us to do, how can we build back in some of that personal aspect as well, but finding the right way to do it with the tools that people are looking for, and so that we're able to work with them. And we know it is possible, you know, many people, whatever the concerns some may have around privacy and all the rest of the things, you know, people use platforms like Facebook, they use things like Twitter, they use all these platforms, and they do create some sense of interaction, rightly or wrongly, in some instances that's again debatable, but people use them. So it's trying to learn the lessons of how they work for people and what we can do to deliver the credit union difference in a way that's going to work for folks in that way. Building on the success that we've already had with Money at Work is another part of our plans. And then finally, just having a look at what we could do to develop further our in-person service delivery. So the age of having a big branch network across the region isn't with us anymore. You know, it's just not sustainable. The footfall isn't there. What we really want to do is to find a different way. And I think it's a kind of a bit, for me, our working hypothesis is it's a bit of a back to the future moment. So when I very first started in Barclays, we didn't really have this, but when I moved to Bristol and West, I became aware that there were these things called agencies. And often a local estate agent or a solicitor or some other professional in a small village, small town, would be an agent for the building society. And they would provide some basic services through that agency agreement. So my hypothesis, or the thing we'd like to have a go at, is enabling that through other community hubs within local areas. So could we work with the community-owned pub, the community-owned shop, within a village, within a small town, within our quite broad and often rural geography, to say, we train you and we make sure you're provided with the right tools and the right information to be compliant and to make sure that you do things properly. Can they provide on our behalf, for a small income, service to their local communities, and really try and embed ourselves with them, supporting them as well for mutual advantage, again, which comes back to the mutuality of what we're all about. So yeah, that's the 4 key things that we're looking to do with the
Brilliant. Well, I think that was just such an excellent example of how your organization is able to think differently and embrace the challenges that this, you know, world of moving into digital. Brilliant for the mainstream, but some tails at the distribution that really need sort of looking after. So it's really fantastic to hear that you've got that firmly in your sights, James and Harry. So I think we're gonna round off the conversation now. So just want to say thank you very much to you both for being on the Cuppa Club. You know, really great answers. To the potential investors, please do download the offer document and do dig into the risks. It's important that we all go into this with our eyes open. So that offer is open and it's on ethex.org.uk. So you know, fantastic. Thank you guys so much, and remains for you to say goodbye to the audience.
I think just before I do say goodbye, we should also thank very much our partner or the organisation who's supporting Great Western Credit Union within the bond offer, as well as all our wonderful other investors, which is Fair for All Finance. So they're offering still to match pound for pound right up to £1 million of new funds with £1 of their own investment too. So we're taking the total raise right up to that £2 million mark that we're looking to achieve. So a big thank you to them, but really as well, a big thank you to everybody who's been with us today in the Cuppa Club, and of course everybody who comes along later to have a look at the recording as well. Thank you all.
Yeah, thank you very much indeed.
Okay, thanks so much. Bye.
Bye for now.